I'm the only one in class the other
Yeah,
time. So
yes.
mm,
Let me share my screen. So,
Good evening, sir.
yeah, good evening, Glory. So, how are you doing today? Uh,
I'm doing well.
okay, so this evening, we are going to take a look into our change of accounting dates because in our last classes, we have addressed the determination of accessible profit that relates to the when a business just commenced an operations, then when there is when there is cessation in the business as well. So today we shall be taking our discussion on the change of accounting dates, change of accounting dates. So when we have a change of accounting dates, it is actually one of the abnormal period that affects the way we do our computation, right? You know, when you have normal period, so your normal period is between, let's say, 12 months, but once you have an abnormal period, so that is when the period could be longer than 12 months, or it could also be shorter than the 12 months accounting period. So, and when a change of accounting date occurs, mm, during the period that the taxpayer carrying on business, either trade, either profession or vocation, and such taxpayer now decides that he or she wants to change the accounting year end for his financial statement. So it means the way the tax will be assessed will quite differ from the way we have been doing it because when you decide to change your accounting year end, you know, you need to also carry the revenue authority along. It's not something that you can just wake up one day and say, yes, you want to start changing your accounting year end. No. So you need to carry the revenue authority along because if the change of year end did not is not approved by them, so there is nothing you could do. So you know, which means you need to inform them, you need to write them, and also provide the reasons. You provide the basis why you want to change your accounting year end. And some of the reasons for change of accounting year end or account dates as follows. Number one, if there is government legislation or directives uh, that a company needs to comply with. You know, there are, for instance, now in Nigeria, we have some industries that are being regulated by some of the agencies of the government. We normally call them regulator. For instance, we have Central Bank of Nigeria. So the Central Bank of Nigeria is a regulator to all the banks in the country. And if an entity that has been preparing its financial statement using different dates now want to comply with the legislation, you know, the government can just wake up one day and instruct everyone in particular industry. They can decide to say, okay, all the companies that operate in this particular industry should follow this accounting year end. Maybe it should be between, they may just decide any date for them. So if that's occurs, what will happen? It means the period which that entity have been preparing the accounts will need to change. And if that's change, so that the we also need to follow in determining the accessible profits for that particular accounting period. Then to also is the consolidation of financial statements of companies within a group. When we also have company that operates under some group structure, and if a parent company decides that the the accounting period that they want to be using is this, and one of the subsidiary is using different accounting year end. So they may decide, the parent company might give a directive to all the subsidiaries that they need to align their financial statement year end with that of the group or with that of the parent company. So what will then happen is that such subsidiary will also need to change his accounting year end to align with the group reporting structure. Then if there is also merger or acquisition of companies, so it means that such case could also lead to company changing its accounting year. And if there is a merger, so automatically the company that's merged, or the company that's merged with the other company, they may, when there is a merger, it means that the two or more companies are coming to become one. So, and in the process of a merger, they could come up with a new name, or they could also decide to retain the old name, whichever way they want to go. If there is any change in their business structure, that okay, the company that's that I mean the merger that they did will change so many things in their business operations, they may also decide to come up and as well change their accounting year date. So the tax authority consideration, where there is a change of accounting dates, what are the considerations for the tax authority? Number one, the request must be made in writing by the taxpayer before the revenue authority can give such consideration. Like I explained, it's not something that you just wake up one day. That is why you will see that when companies are going into some structure arrangements or some restructuring arrangement, they normally carry the revenue authority along. Do you understand? So, which means they need to involve the revenue authority, which is the FRS in this case, so that communicate their they communicate to them in writing of what they want to do. Then the tax authority must also assess the commercial reason. So if you are changing, they will look at it that okay, for what reason do you want to do this change of accounting date? If it is something that they are also comfortable with, and it's also it also gives them that comfort that okay, maybe because of what has happened within the group structures, or at least they just need to assess the reason behind change of that accounting date. If they are okay with that, they also approve. But if not, they will tell you that they are not going to approve. Then the confirmation of permanency of the new date shall be availed to the tax authority. So, which means if you are changing your accounting year end, you can't be saying that okay, you want to change in January during this year, the following year you change again. So you just have to come up with the permanency of a new date, that yes, this is the new date that the company wants to adopt. So what are the procedures that we need to follow when this arise? Number one, we determine the first year when the change occurred. We determine the first year when the change occurred. So when is the first year? So the first year is basically the period which you did not prepare your accounts based on the usual dates. Are you getting it now? Based on the usual dates, when you did not prepare the account based on the usual dates, that is going to be your change of, that is going to be the year of change. If, for instance, you have been preparing your accounts up to 31st of March, and 31st of March, you've been preparing your account, and now want to change from 31st of March to 30th November. So, if in 2022, you prepare your accounts up to 31/3/2022, and in December, in the following year, you now prepare 30 November 2023. You will see that it was in 2023 that you change these accounting dates. Are you getting my point now? Because this is the period which you fail to prepare the accounting year end based on the old dates. So the first thing that we need to do is that we determine the first tax year when the change occurred, the first tax year when the change occurred. Then we determine the next 2 years following the number one above, which means you just consider the 2 years subsequent to the date that you change your accounting date. Then you compute the accessible profits on preceding year basis using the existing accounting date for the 3 years in one above. You also compute your accessible profit on preceding year basis using the new accounting date. You have been using one old date, you have been using one accounting date before you change. So what you are going to do here is that you are going to prepare two accessible profit computation. You prepare one based on the old dates, while you now prepare another one based on the new dates. Then you now add up separately your computation that you have in number one and number three. In the figure that you arrive at when you compute based on the old dates and when you also compute based on the new dates. So you add all the figures together separately. You add them separately. So you now select the higher of the two. So when you select the higher, that is what the revenue authority will tax you on. So that is just it. That is it. Now let us look at this illustration. So we have this illustration here. Piggy Bank Limited, a leading microfinance savings financial institution in Nigeria, was recently acquired by a larger parent company, Crypto Bank. So this is the new bank that's just acquired the Piggy Bank Limited. As part of a group-wide policy to streamline reporting and consolidate financial statement, I explained that it could be that based on the group reporting structure, it could lead to one of the reasons why an existing entity wants to change its accounting year end. The management of Crypto Bank PLC has mandated that all subsidiaries align their financial year ends with the group accounting dates of 31st December. The following result was taken from the group of the company. So first year end, the year ended 31st December 2004. 31st May 2004, followed by the 31st May 2025. This should be 2025, not 2004, 2024, 2025. Then year ended 31st May 2026. Period to 31st December 2027. Then year ended 31st December 2008. So from the information that we have here, when was the change of the accounting dates? What year did the entity decide to change the accounting year date?
2027.
Exactly, 2027. So this is when the entity decides to change the accounting year end. So let me copy this so that we can do our computation. So we said that the first period that the entity changes accounting year end was 2027. So which means we will now calculate from, we said the first thing we need to do was to determine the first year of the accounting year. The year that the business changed its accounting date, isn't it? Then the first year that the business changed its accounting date was when it was 20 first year first year of change was 2027, right? Then following by the next 2 years. So when would that one be? 2028, right? And 2029. So which means the period which you are going to assess would be for 2027, 2028, and 2029. But it has to be on the preceding year basis. Now let us move on. So we have year of assessments, right? Then we have basis period. Then we have accessible profits. Our year of assessment for 2027. For 2027, yes. Based on the old dates, we need to first compute based on the old dates. Sorry. I need to apologies. I need to do it proper. So we have what's the name of the entity? Piggy Bank Limited, right?
Yes.
Determination of accessible profit for the relevant years of assessment. Then we have this. We have year of assessment. We have basis period. Then we have accessible profit. So we can have our Naira here. So we have this, and then we also have this. So the year of assessment that we have determined based on the rule, the first year of change in accounting dates was 2027, right? 2027, then 2028, then following by the 2 years, 2029. So these are our year of assessment. Then our basis period based on the old dates. So we need to indicate that based on the old dates, based on our old dates, our old date was when 31st of May, right? So which means we are going to say that 31st 5. Then if you are saying preceding year basis we need to be when? Is it 2027 or 2026? Preceding
2026.
year. Exactly, 2026. To when? It will be, if you
Uh,
count 12 months
it will start
backward, June,
from 1st
right?
of June 2025.
Thank you. 1/5/16/2025, right? Then the second year too will also be from 1/6/2026, right? To 31 5, 2027. Why for the third year, it will be 1, 6, 2027 to 31, 5, 2028. So let us now determine our accessible profit. Now, the accessible profit that we have for 2020 for this period was what? Between the accessible profit as at this year ended 31 May 2026 was this 2 million. Are you getting my point now? So, what was the beginning period for this particular accessible profit? This 2 million, what was the beginning period for it? Before it ended in 31st May, what was the beginning period? Hello, are you there? I can hear you.
Come again.
I said our first year of accessible profit that we want to determine after the change of accounting days was 2027. But the
Yes.
accounting period that we are assessing ended when 31st December 2026. So if we now come to this particular profit that has
Yes.
this 31 May 2026, what was the beginning period?
First
First
June,
of June
June 2025,
2026.
2025.
2025.
Okay, that was the first one.
Yes,
We
this is
stated
it
it on the
now.
basis period already. Yeah, we
Yes,
stated it on the
no,
basis
yes,
period.
I'm just saying that this particular profit that we have here, what period does
Yes.
it relate to? It means it relates to 1 6 2025 to 31 5, right?
Sure.
2026. So we don't need to stress ourselves on any computation at all. What we just need to do was to pick this particular figure. Are you getting my point now? Because this accounting date that we are looking for, this period that you are looking for, everything is here. So there is no need for us to say that we want to correct
Wait.
anything. Are you getting it now? So we just
Yes.
take it as 2 million. For 2028, we have 1 6 2026 to 31st May 2027. So if we are to check the accounting period that this one relates to, if you have to check the accounting profits rather that this one relates to, so let us come here. We also have this, but you can see that this is period two, which means whenever you have period two, it means number one, is either that profit is longer than 12 months or it is shorter than 12 months. Are you getting it now? So if you are now to look at this, in 2026 accounting year end, the profits ended on the 31st of May. So automatically it means the new year that begins here will commence from when? 1 6, right?
Yeah.
2026.
7.
And when this period ended here? 31 12, 31 12, right? 2027. So how many months do we have here? This is 12 months, right? So how many months do we have here in this
18
3.4?
months. 18
18
18,
months.
months.
18
Is it
months.
18 months? It's not
18
18
months.
months. It is
Yeah.
not
This
18. It is not
is
18
this
months.
is
It is 19.
oh yeah.
Are you getting it now? So you need to count it very well. Otherwise, you may miss out the answer. Because
Mhm.
in June, the period started when? June 1st. So which means it was only 5 months that left that was computed in 2026. So which means it remains 7 months here. So if you now add 7 months to this 12 months that you have here, how many months is that one? That is 19 months. Is it clear, please?
Yes.
Yes, it's clear. It's clear.
Okay, yeah, cool. So it means we are going to have 12. Oh, okay, let me do it here. I want to do something. If there is going to be any workings, I want us to show our workings here. If there is going to be any. So let's say this one is 2 million. So this is going to be 12 divided by 19 times 3, 4. So what is our answer?
2,147,368.
Okay, I'm coming, please. Okay, you said 2 million,
147,368.
2,147,368. Cool. Then the third one, we now have this one from 1st of June 2027 to 31st of May 2028. So this 1st of June 2027 is still part of this profit that we have in these 19 months, isn't it? 1st of June 2027, the profit is still in this particular one. But how many months can we see for, if you are saying 12, if you are saying 1st of June, 1st of June 2027 to 31st of December 2027, how many months is that? That is 7 months, right?
That's 6
7.
months.
Yes.
7 months. 7 months. Are you getting now? It is 7 months, not so we are going to say that we have this. We have 1 6 2027 to 31 12 2027. So that one will give us what? 7 divided by 19 times 3, 4. And then the second one will now be 1 1 2028 to when?
31st May.
To 31st May 2028, which is 5 months. So, if you add that 5 months to this, it will give you how many months? It will give you 5
Sure.
months, right? So, which means, I mean,
Okay.
sorry, to give you 5 months. So, which means that this particular profit that relates to this period, you can find it here. You can find it in this one 4. Are you getting my points now? You can find it in this one 4, not in this 3, 4 again. The 7 months, the first 7 months will be from this 3, 4. You know that automatically the accounting period for this particular profit will start from when? It will start from 1 1 2028 to 31st 12 2028. Is
Mhm.
it clear, please?
Yes,
So
sir.
then we now have so we have 5 over 12 times 1 4. So what is our profit for this one? So 7
Yeah,
divided by
calculate
19.
again.
No, let us do it one after the other so we cannot combine.
7 divided by 19 by 3.4 will give you 1,252,632.
Okay. Then this one.
That will give us 583,333.
So let us add it together.
1,835,965.
1,835,165, right?
Nine nine
165.
six five nine nine six five.
965. Okay. So this is for the third year. This is based on the old accounting date. Then for the new accounting dates, we now say we also say that Piggy Bank Limited determination of accessible profit for the relevant years of assessments. So we now use this one, which is new dates, right? So if this is the new date, we also have year of assessments. We have the basis period. Then we now have our accessible profits. Let us put Naira figure here. So our year of assessment will be 2027, 2028, and 2029. So our new dates ends when? 31st December, right?
Yes.
So if you are saying that it is going to be based on the preceding year basis, what is the preceding year to 2027? That is
That will be the 12 calendar months for
2026.
2026,
Exactly. So this is
January
2026.
to
So
December.
what exactly is going to be from 1 2026? Then the basis period for this one will also be 1 1 2027 to
27.
31st December 2027. And the third year, 1 1 2028 to 31 12 2028. So let us now compute our accessible profit. So the profit that ended on 31st December 2026, is it possible for us to get that? No. So which means the period that ended for this particular year could be seen where? It could be seen in 2020. This one started from January 1st, 2026, right? So we need to look for the calendar period that has this January 1st. So the one that relates to January 1st will be from here, January 1st, 2026. Are you getting my point now? So which means for January 1st, 2026 to 31st of May, 2026, how many months is that one? That is just 5 months. Are you getting my point? So which means, and don't forget that this period, this particular accounting year that our year ended is already coming from 2025, which means this is 12 months. This is 12 calendar months. This is 12 months here. We have initially determined what as how many months do we have for that particular accounting period that we have their profit. So in this particular case now, what we can see here, we don't have December 31st. We don't have the profit that ended on December 21st, 2026. Are you getting my point? But the profit that we have here relates to 31st of May 2026. So which means uh since our calendar year starts from 1st of January 2026, it means how many months can we get from this particular accounting profit? How many months can we get from here?
5 months.
Exactly, you can get just only 5 months. You can get only 5 months. So that is where uh we have 5 divided by 12 times 2 million. And then the second one that we also have here is will now be 7 divided by. So this remaining profit that we have that relates to December 31st, 2026 is inside this 2027. Are you getting my point now? Is inside this 2027, because what we are saying here is that this profit starts from January 1st, 2026 to, it starts from June 1st, 2026 to 31st December 2027. And we are looking for a period of, we are looking for which period? We are looking for a period that starts from June 1st, 2026 to 31st December
December.
2026. And that one will also give us 12 months, right? This is 19. This is 19, not 12. The profit
Yeah.
that is 19. So we have 7 divided by 19 times 3, 4, right? So that is for this one. Let me clean this. Let me clean this one. Okay. So what is our answer here?
We
5
have
divided by 12 times 2 million. What's the answer?
833,333.
The second one is what? What's for the second year?
1,252,632.
252,632.
232. So let us add everything together.
No, 632, sir.
Okay, 632. Thank you. So let us add the two figures together.
2,2085,965.
2085. Hold on, please. What is wrong with this pen? Okay. Okay, you said 2 million.
085
Okay,
965.
965. Then for 2028 year of assessments, so we have January 1st, 2027 to 31st December 2027. So this particular profit, where can we see it? We can see it from here. And what you are looking for is 12 months, right? So don't forget that you have already taken 7 months from the 19 months. So which means what is now left for us will just be 12 months, right? 12 divided by 19 times 34. What's our answer?
2,147,368.
Okay. Then for 2029 year of assessment,
I think that
so
you
we
just
have
pick it direct.
exactly,
That's 1.4, right?
yeah. So we can now compare the two. So we can now compare the two. Our accessible profit. So we have year of assessments. Year of assessments. And we have old dates, and then new dates. Twenty 2027, 2028, and 2029. So for this, our new dates, let's take new dates first here. We have 1.4. Then the next one, 2147. D68. And the third one, 2085 965. 2085 965. For the old dates, our accessible profit for the old dates, 1835 965. 1835 965. Then the next one for, then we also have 2147368. 2147 2147368. And the first one for 2027 year of assessment, this is 2 million. 2085,965. What's wrong with this legacy? 2085 to 65. 2085 to 65. 2147 2147368. So I can now clean this. So let us add all the two figures. I mean, all the figures together under each of the bases that we have computed them. So what is the figure for this?
For
What is the
the
figure for this?
for the oath date,
Yeah.
we have 5,000,983,333.
Okay. Okay. And the second for the new dates, what's the total?
5,000,633,333.
Okay. Okay. So as the tax revenue authority, what they are going to select would be this
So
one. So it
yes,
means the revenue authority will assess the company based on the old accounting dates, as this gives higher accessible profits when compared to the new accounting dates. So that is what will happen here. That is what will happen here. So I hope this is clear, right? I hope this is understood now.
yeah, it's okay.
Yeah.
It's clear.
Okay, great, nice. So I will share the solution with us. Okay. So this is everything here. Now let me see if we have any other question. Okay, so this one, this question was copied from ICANN pack. So we may also check the pack. We can, what I'll just advise us to do is that let us work on it first. Then when we work on it, just for us to see our understanding about this topic, about this change of accounting date, then when we do it, we can now compare with what is in the ICANN pack as our answer. So any question before we move to another topic? Any question thus far? So I'm going to stop the recording because I'm going to record another session, which is a different topic.